PayPal's latest earnings report came out. Good news, you don't have to give up on this stock.
Awesome. Yes!
So in that latest earnings report, their year-over-year net income increased by 20%, which is huge, and their revenue increased by 7%. Now, before I go any further, if you don't know who I am, my name is Tepper. I'm the founder and CEO of Tykr, which is a platform that helps you manage your own investments with confidence. You can certainly go join for free. We have about, as of the recording of this video, we have a little over 8,000 customers in over 50 countries, and our Trustpilot score is a 4.9 out of 5. So if you ever hear me talk about Tykr, don't take my word for it. Go see what our customers have to say, and you can make a decision from there. So speaking of Tykr, let's jump into Tykr and see what it looks like with PayPal. You can see PayPal is still overpriced. That score is a 44 out of 100. The higher the score, the safer the investment. And then the margin of safety is 0%. If the score was 50 or higher, the stock would be watch. And if that score together was 50 or more, this stock would be on sale. So let's jump to that earnings calendar. This is exactly what we want to see. The EPS estimate was $1.22 and the reported was $1.30. So they beat that estimate by 6.5%. Now this is where things get interesting. You can see here on the revenue, year over year is looking really good, nice consistent increase. With the net income, this is the issue on the year-to-year basis on both net income and EPS. But if you flip this to quarterly, you can see they are starting to increase profitability a little bit, and that's exactly what we want to see. They did announce that 20% jump from a year ago, which is outstanding. With this number, like if we go back to yearly, if we see the 2023 report, which should happen in sometime Q1 of 2024, if this jumps up, we should see that margin of safety jump from 0, it could be 20%, it could be 30%, it could be even higher. If it jumps higher than 50%, and we see the score jump above 50, this is going to tell institutions the overall financials are improving, and that's when those institutions could really start piling into the stock and the share price could take off. So we're going to see what happens in Q1 of 2024. Okay, so here are some of the highlights with the earnings report. Alex Chriss, the new CEO, he has not talked about a roadmap yet for 2024, 2025. I'm excited to see what that's going to be, but he and his team are focusing on small and mid-sized businesses. So this is a great play. We want a lot of small and mid-sized businesses to use PayPal as their payment option. What that means is you get a lot of consumers making transactions on PayPal, and that's where the numbers really increase. And PayPal is located in about 200 countries and territories. They actually have the largest footprint of any payment tech platform out there. Now, on the negative side, there's a subpoena happening right now with US government looking into stablecoin. This was an announcement recently made this year. PayPal has stablecoin. And what they're looking into is, number one, is if stablecoin were to crash, could it cause other assets to crash as well? We have to keep our eyes on that. And number two, if stablecoin takes off, there could be people that use stablecoin for money laundering. So
Don't you get it? On the outside, it's a nail salon, right? On the inside, it's the best money laundry a growing boy could ask for. I take your dirty money and I slip it into the salon's nice, clean cash flow. That's called layering. Final step, integration. The revenues from the salon go to the owner. That's you. Your filthy drug money has been transformed into nice, clean, taxable income brought to you by a savvy investment in a thriving business.
I think it's a good thing it's being looked into, but it's not like a legal issue is bringing PayPal or stablecoin down at the moment. Just so you know, if you're hearing these rumors or words around the subpoena, it's nothing to be too afraid of. It's just due diligence. And the other big thing to pay attention to within that earnings report would be Apple Pay. So Apple Pay is becoming more popular. A lot of people using their iPhone, they're making those purchases, those in-app purchases, or just buying apps outright with Apple Pay. It's just very convenient. So for context, the ways that people make payments around the globe, number one is Visa, number two is MasterCard, number three is American Express, number four is PayPal, number five is Amazon Pay, and number six is Apple Pay. So Apple Pay is becoming more popular. So they're on the radar, but I don't think it's a big threat right now. I think what Alex Chriss is doing, the focus should be on those small in mid-sized businesses, get those businesses to use PayPal, allow their customers to make payments with PayPal. That's a great place to start. Okay, all eyes are on 2024. We'll see what happens in Q1. I've been a longtime holder of PayPal, and I'm finally excited to see some good news here. It's not huge news, but it's moving in the right direction. I'd love to hear what you guys have to say. And if there's a stock that you're maybe on the fence with, like, hey, maybe I should move forward with this, maybe I should avoid it, please comment below. I might take a look at that and do a review. If you like this video, hit that like button. If you want to see more videos like it, hit that subscribe button. And if you want to make sure you're finding good stocks to invest in, of course, avoid some bad stocks that can lose you money, I invite you to join Tykr for free.